G'day folks, welcome back to another update for natural gas. Now the charts are showing a potential upturn for the natural gas prices, at least on the daily. We'll include backtesting, which demonstrates how you traded using one of two strategies, so don't forget to hit that like and subscribe button to support the channel. I recently posted a video comparing two strategies, which I will use as a back test for today. Links are in the description below, so watch that for that video to better understand the concepts I'll go through here. In terms of the outlook, as of today, July 15, supply-demand balance remains tight. US storage near 5-year averages amid restrained production, and global LNG demand, especially from Europe and Asia, is increasing. Lower rig counts and infrastructure limits imply constrained upstream output, supporting potential upside. Price forecast varies. Some expect summer rally into late 2025, with Henry Hub in the US $4, then rising in 2026. Bullish sentiment prevails broadly for natural gas in late 2025 due to supply restraint and rising demand. BOIL offers leveraged upside but comes with high costs and volatility. UNG's moderate expression of the outlook, and KOLD is positioned for bearish outcomes. But gas markets fundamentally are skewing bullish in 2025. So again, we always look at the long-term trends. So here we've got the monthly, the weekly and the daily. And you can see on the monthly, the price is above the moving averages. And so was the CCI, although notice it's actually pulled back into that moving average range on the CCI. So that's showing a slight weakness. The price is still fairly bullish on the monthly, but again, just be cautious about going along too strongly if you're trading on the higher timeframes. On the weekly, that's already broken below on the price, moving it below the price moving averages. And the CCI is in that moving average range, giving us somewhat neutral positioning. So bearish to neutral on the weekly. And on the daily, we've got a bearish momentum at the moment, although the CCI is broken up to show a bullish momentum. The price is still below the moving averages, but that's also rising ever so slightly since our last video. Now, these areas here are fair value gaps, these highlighted in red, and that generally means the price will retrace back into those areas at some point. So here, for example, on the daily, you can see there those candles last few days broke into that fair value gap there and filled those orders. So we may see some bullish movement in the near term with that fair value gap up there. But do notice as well on the monthly and the weekly, we've got these fair value gaps down here in that range there. So just be careful. We might see further downside possibly. So again, that's a longer term play, but we'll take it one step at a time. We look at the daily initially and then the hourly. Now, if I go to the 1 hour time frame, these two here are the two different strategies. And again, follow the video from the description below to understand how they work. But basically, we still trade in the direction of the daily if you're trading on the hourly. So you can see there the price is below the moving averages on the price, and likewise on the CCI at that point there. So we only take short trades, and that would have started back there around the 24th of June, and that's where I've started these two back tests going short only. Now this one is a CCI 14 strategy. So you would have taken short positions and you would have closed it out once you see that CCI on the daily break into that moving average range. That would have been the very last stage of closing out your positions. Otherwise, you would have let it run. So, and that equates to about this area here on the 1 hour time frame. So you would have got out there with about $1,400 of returns with a few single trades, and that's a CCI 14 strategy. This is a CCI 350, and again, that's where you go short. In this case, when the CCI breaks below the moving average, and you close it out each time. Breaks above that, and you're making enough with the break even, or that you're making enough returns in terms of your percentage gain. And again, you would have closed that out at the very latest once that price started moving up, and that was in conjunction with that daily price movement. So at that point there, you would have got out somewhere around that point there when the price started moving to the upside on the daily, and that was returning about 5,340 if you were trading that particular strategy. So looking at BOIL on the long-term trends on the monthly here, it's showing a very flat moving average range, and there's no CCI for it, but you could probably ask that, or probably say that's a neutral, if not a bearish momentum at the moment on the monthly chart. On the weekly, likewise, very flat movement, very consolidating in that range after having a bullish divergence here with this bullish CCI momentum, although notice the CCI is turning down at the moment, and so is the price, giving us a bearish momentum at the moment on the weekly. And on the daily, it has been bearish on the price and the CCI, but notice similar to the natural gas price, that's broken into that moving average range, so it's giving us a potential upswing. And if we go to the 1 hour charts in terms of trading, and this is trading shares, so we're trading $1,000 lots. You would have been going short during that period, possibly, if you were trading short from around the 23rd or 24th of June. That equated to this area here on the CCI14, and that would have generated a couple of trades there, about $63 if you're trading $1,000 lots. And on the CCI350 strategy, you would have gained, if you're again closing it out near the top there, once that started seeing that bullish divergence on the hourly, you would have closed it out somewhere there, and that was generating approximately $170 odd in returns. So for KLD on the monthly, that's showing bearish momentum at the moment, below the moving averages, although the CCI is showing somewhat bullish movement. It's very flat there. A bit neutral there at the moment. Notice these fair value gaps up here, so we might see a very strong push to the upside to break into these ranges in the very long term, I'd suggest. On the weekly, likewise, we've got those fair value gaps, but also the price is just above those moving averages, although it's very narrow range. Likewise on the CCI, and it's broken down into that range, so somewhat neutral on the weekly. On the daily, was bullish for a number of days there, but it's finally broken down into the CCI moving averages there, and so is the price is moving back towards that moving average as well. So cautiously, I'd wait for that to break above to go bullish on this one. Now, if we're to look at the 1 hour charts, if you're trading this on the 1 hour time period, you would have taken long trades from the daily back there around the 24th of June, the opposite of what the other charts were doing. So you would have gone long here. The CCI14 strategy would have generated about $13, not much. Again, we're only trading small amounts, $1,000 lots, whereas the CCI350 was generating, again, at that close there, when it started declining, that was around about $180, trading $1,000 lots at that point there. And looking at UNG on the monthly, that's bearish. This price is below the moving average range, and it's been bearish for a number of years now. Had a bit of a slight movement to the upside there. Notice also these fair value gaps, and again, that's a very long-term play. The CCI is also very bearish, or moving into that bearish mode on the moving averages. On the weekly, we did have a bullish divergence back here. That's already played out, it seems. And now the price and the CCI broken below the moving averages, giving us a bearish momentum. And on the daily as well, the price is still bearish, but the moving averages has been penetrated on the CCI, so giving us a neutral positioning. So I'd wait for that to decide where it's going to go before taking any long or short trades on that one. In terms of the 1 hour chart trading, if you're again going short from this period around about the 23rd or 24th of June, going short on the CCI14 strategy would have generated at that point, closed out no trades at $75 returns, again trading shares. And the same period on the CCI350 strategy was generating about $100 returns on that one there. So again, reference the video I posted recently, the CCI14 versus the CCI350 strategies. It's comparing the two strategies in terms of the returns, and that's also the results are posted in a template of a table showing the analysis. Also, if you enjoy the content, feel free to subscribe to the Patreon page where I publish weekly bullish shares across regions of the world's markets. Hit that like and subscribe button. Thanks for watching, and see you in our next video.